Back to work, back to work, back to work. It's about that time of day again here, folks. It's Tuesday evening. It's August the 27th, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, in case you're here for the first time, right, I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. I have a very important job tonight. Tonight, my job is to identify the best levels of support and resistance, the best entries and exits I see setting up, and some important traps to avoid so we can keep all that money in our account for tomorrow. That's Wednesday's trading session. Got a lot to cover here tonight on the video. We're going to grab some oil, some S&P, Nasdaq, of course, and then we'll round things off with some gold and some euro. I'm going to jump in first tonight on the oil market because, as you probably just saw, oil just went shooting higher into the close. And of course, that big shot higher tells me four very specific scenarios I'm waiting for here on oil. Let's grab that black gold, the Texas tea. Let's see what oil's up to here tonight. And of course, this big move higher here is coming in the wake of the 4:30 p.m. Every Tuesday, we get that API report. So we're getting that API report here this afternoon. Every Tuesday afternoon at 4:30 Eastern Time, we get that API report. And as you can see here, I won't bore you with the details, but as you can see, the market apparently thinks this number is quite bullish. I won't worry about what the actual number says. And this, of course, is a big deal because now it is successfully breaking free of what really has been a range-bound market most of today's trading session. So now, we get that big 1, 2, 3, big run back up here now. And this big spike, right? We call these a spike, right? Never pulls back to the moving average. Anytime I see a spike on the chart, I've got four different scenarios. And since, of course, the day started off with a range, I'm going to talk about four different scenarios and four different ways those scenarios can fail to look for a possible sell back down into that trading range. So I have a lot to talk about tonight. I'm not going to go over it right now, but we're going to dig into a lot more detail on those four different patterns I'm waiting for here on crude. I would like to be a buyer on this. I've got four different scenarios, right, to tell me where to buy on this. We'll go over those tonight. But again, I'm also going to, because we start off in a range, we'll talk about four possible failures, how to trade those failures as well. We're going to dive into that oil here in a lot of detail here tonight in just a few minutes. Over on the S&P here, S&P, as you can see here, all chopped up, man. What an ugly market here today. Very choppy across the board. Now, of course, we had a range-bound market going into yesterday's trading session. We go up, the buyers once, twice, and then collapse back down in. So we're definitely more on the bearish side right now. Of course, with that bearish momentum, I want to be a seller. The problem is I don't want to sell inside this range, right? That's the no trade zone. So I want to be a seller. I got some areas overhead here. I'm watching this battle zone overhead. I'm looking for a sell setup. I've actually got two different sell setups I'm watching to sell up inside that battle zone. We'll talk more details on these specific setups here in just a moment. But of course, because this is a range, I'm also looking to be a buyer down here as well. I've got my pendulum swing all marked up, and we'll dive more details into that here tonight as well. But I'm definitely looking to be a buyer here, right? On the flip side, how do we buy in a bear market? A very specific entry pattern I'm looking for on the S&P to be a buyer. We'll talk more details on that. Nasdaq is in a very similar situation to the S&P, right? Nasdaq ended the day yesterday inside of a range. We saw that big breakout. The buyers tried a couple times and failed right back down in. None of us should be surprised about that whatsoever. We talked about that in last night's newsletter. So now we've got, of course, this bear move down right now. That bear move down tells me we know we have some bearish momentum. I want to be a seller. I just really don't want to be doing anything inside of that trading range. So I'm looking for a short up around the high of this hidden channel. Again, just like the S&P, I've got a handful of setups I'm going to be watching for up there. I want to sell up inside that battle zone. And again, because it is a range, and of course ranges tell me to sell high and buy low, I've got my eyes on a buy zone down here. And again, just like the S&P, I've got one very specific setup we're going to look for there to buy off of that low. So we definitely want to look to sell high in the short term, But I think we're going to have some buy setups here later in the session tomorrow on the Nasdaq. So we'll definitely talk about that tonight on the video. And of course, how about the gold here? The yellow metal gold also not as dramatic as oil, but gold also, right? Kind of finishing off inside of a range, right? Just kind of, rough and tumble inside that range there. And then all of a sudden we get this breakout, right? And of course, anytime we see this much strength in one direction, we know we're going to probably get another leg. And this is really where it all comes down to right now. I mean, it's go time right now. Do the buyers give me that second leg? If they do, what's the plan, right? If we do get this follow through, right, again, strong move up, anytime we see that much strength in one direction, we're going to probably see, right, another leg. And so, what's the best way to trade this, right? Do I buy now? Do I wait for the market to go higher? Well, remember, it's a range. So you really got to be careful being a buyer up here right now. I want to wait for a little bit more proof, right? And then we'll go out and we'll start putting the plan together. I've got two patterns up here, two very distinct patterns I'm looking for here right now as we try to go up and retest that high. And then what about a sell? What would be the best way to sell this market? Well, obviously, again, it's a range here, right? So ranges tell us to buy low and sell high. I'm right in that sell zone. I'd like to be a seller over here, but with all that momentum, there's one very specific pattern here right now I'm looking for here right before I can confidently sell this market back down into that range. So really at this point on gold, it's very much kind of a wait and see what happens for the bulls. And then, of course, for the bears, there's one very specific and very important pattern I'm going to look for here to sell off of that high. We'll talk about this in a lot more detail, obviously, in this video tonight. And then, of course, over on the euro is bearish. We know those sellers, they're trying to get back down to retest this low. We know those bears are trying to make their way lower. We know we're bearish, that's for sure. So I want to sell at resistance. I've got my what I think to be a hidden channel here, and that's where I'm looking to be a seller here tomorrow. I'm looking for a chance to sell off of these highs. I'd like to sell up around the high of that channel. I'd like to sell up inside a little range up there in that battle zone. I've got two, maybe three different patterns here depending on how the market pulls back, and we'll talk about those three different entry setups to sell off of that high. What if the market keeps going lower? Right? What if we don't get the pullback? What if it keeps going lower here? What's the plan if it keeps going lower? If it keeps going lower at this point, we've got a couple different scenarios. One, will adjust the channel. Two, we'll look for traps. But we'll talk a lot more detail about these specific setups and what we're looking for here on this euro for tomorrow as well. And of course, right, as always, the euro is tied to that dollar. And who knows, if that dollar, right, takes a tumble, this thing could easily reverse here. What would a reversal look like? We'll definitely talk about how to qualify a reversal here tonight on this euro as well. So make sure you stay tuned on that if you're an FX trader here on the newsletter tonight. So we got a lot to cover here. Got some euro and gold, Nasdaq and S&P. And of course, we're going to kick off this session with crude oil tonight. Before we jump into that oil chart, though, I do need to remind you, though, here, I want to make sure you never miss another great newsletter video. I publish these videos every evening, Monday through Thursday before 8 o'clock Eastern Time, and I want to make sure you never miss another newsletter. And it's very simple. Join our mailing list, and I'll shoot you an email right before I publish this video on our YouTube channel, right? I try to reward everybody by being on our mailing list. You'll get the first crack, right, at this nightly newsletter. So it's very, very easy. All I need is your name, your email address. Hit that subscribe now button, right? Hit that subscribe now button, and that will add you to my list. But one very important thing, though, really quickly here, when you hit that subscribe now button, you need to go in and check your email. Check your email. I'm going to send you a welcome email. In that welcome email, there'll also be a verification link in there, and I need you to click on that verification link to give me approval to keep on sending you those emails every evening. So all I need to join the mailing list is your name, your email address, hit that subscribe now button, right? And then check your email, check your inbox, right, for that welcome email, because you got to verify, right, with that verification link inside that welcome email. And then don't forget, sometimes those welcome emails, sometimes they get stuck in your spam filter. So if you don't see the welcome email, check your spam filter. And obviously, if you have any questions, you can always call me here in the office, and I'm always here. Now, one more thing here, down in the comment section, I need your help, guys. I'm always trying to make this a better place to learn and earn. So do me a favor, down in the comments section, I have a question for you. If you could go back and turn back time, how would you do things over again? Or if you're like me, right, and you've done it over a couple times in your career, if you could go back and do it again, what would you do differently? What wouldn't you waste your time on? What would you spend more time on? In your opinion, if you had a redo, if you had a mulligan, right? If you got a redo on your trading career, you could start over again. Okay, and most of us probably have a couple times. I know I blew my first 3 trade accounts, and I started over a couple times, right, many, many years ago. If you could start over again, what would you do differently? Leave me that comment in the comment section below. Or maybe you are brand new and just getting started. In your eyes, what's the most important thing that I can teach you on this video newsletter every evening? Because I'll tell you what, guys, I am always listening. And the reason why this newsletter has been going on for over 10 years every night on our video here is because of people like you sharing your feedback, letting me know what's the most important part for you. That way I can keep doing more of that. And don't forget, too, I always love to hear from you, too. You know, you don't need to just hang out in the comments section. You can always call that toll-free phone number. You can always use that live support tool, because I'm always here to help and I'm always listening, right? And I'm going to date myself here for a moment, but I actually talk on the telephone. Yeah, I know, kids. There was a day not too long ago where we actually spoke to each other on the telephone. So believe it or not, if you call that number, I'm going to answer the call and we'll actually talk, right? It's an amazing thing, this telephone, right? I'm kidding with you, obviously, right? But don't worry about calling the office. I'm not going to send you to some random call center somewhere where you'll get bombarded with robocalls, right? I'm a small family-owned business. My wife and I run the office here at School of Trade headquarters in Los Angeles, and we love to talk to you guys. So don't be afraid to pick up that phone. Call me in the office. We are the opposite of the mega corporations, right, that I know you guys, right, don't like dealing with. So please make sure you're aware. Call that toll-free phone number. Use that live support tool, because we're always here listening. We're always here, ready to serve here for all you guys' needs. Now, jumping into the calendar here for tomorrow, let's get this video moving here tonight. Tomorrow, of course, is Hump Day, right? We got middle of the week tomorrow. Now, as I mentioned earlier on in the video, or earlier this week, right? As I mentioned yesterday, tomorrow will probably be the last full day of this week, and that is because of the Labor Day weekend coming later on, right, in the week, right? We got Friday, which will be a very quiet day, right, ahead of that Labor Day weekend. Of course, next Monday is the actual Labor Day holiday. It's a big deal, right? A lot of folks are on vacation this week. A lot of folks are not on vacation physically, but are on vacation mentally right now. You know who I'm talking to, right? And of course, all of Europe's on vacation right now, right? So things definitely have been a little bit slower here this week, right? We've been very busy in our trade room. Had a great week so far in our trade room. Having no reason to think tomorrow won't be another great day. So of course, tomorrow we'll be in our trade room 8 o'clock Eastern time, and really the only news we have tomorrow is that weekly inventory report. Now, this weekly inventory report is a very tempting report to trade. There's a lot of volatility that comes around that weekly petroleum status report. This, of course, will apply only to crude oil traders out there, right? This will not apply to any other markets, right? Unless, of course, you're a natty gas guy or gal, right? That a little bit of an impact on natural gas, but for the most part, this will only affect us oil traders here for tomorrow. And you know, my rule of thumb is I kind of try to stay away from oil on a Wednesday morning after 10 o'clock, and then I wait for that news to come out, and then I'll get back at it after 10:40. So there's this little window of time right in the middle of the day tomorrow, after 10 o'clock, and then after 10:40. So between 10 o'clock and 10:40 tomorrow, The problem is the market gets really slow. Again, oil only. Gets very slow ahead of that weekly inventory report. So you'll find it pretty difficult to find setups, reliable setups, though, that is, right after 10 o'clock tomorrow. And then, of course, the news comes out at 10:30, and so I always like to give it a few minutes after that news comes out, right, 10:40, maybe even 10:45. Once that dust settles, right, after that news comes out, then we'll resume trading oil, right, once again. Now, I know what you're thinking. It's very tempting to want to trade that report, but I'll tell you the same thing I say every Tuesday night ahead of that Wednesday inventory report, that yes, you can make quite a bit of money off this news report if you pick the right direction. The problem is you're not going to be able to get in after the news comes out because it moves so fast, and it's almost impossible to trade it on a simulator. You know what I mean? That's the hard part with news. News is very difficult to practice on a simulator because you're not going to get the right fill. Right? And on a real account, you try trading a news breakout, you're going to get the worst possible fill, and you're going to lose a lot of money in a very short period of time. So the danger of trading during news, yeah, you can make some money, but just like making money in Las Vegas at a casino, it's difficult to make money every day. Right? There's a very small percentage of human beings that can actually beat a casino every single day of the week, right? Yeah, you can get lucky, right? Hit blackjack a couple times, but try to get lucky in a casino every single day. Your luck will eventually run out, and well, how do you think they built those big golden hotels out there, right? They didn't build it by making it easy to make money every day in those casinos. Think of this weekly inventory report like trying to make money in that casino. Eventually, you're going to pay the piper. Eventually, you will give that money back. And the big problem is when you're trading news and you take a loss, it's not just a small loss. It's a big loss. It's a big loss. And like I say every week, those big losses, it's not about the money, guys. It's about the confidence. You can make the money back. But once you take a big hit to your account, you take a $5,000, $6,000, $10,000 hit to your account, you're going to be scared to trade next time. And then you really get an uphill battle ahead of you. So I'll tell you the same thing I tell all of my clients on Wednesday mornings after 10 o'clock. You are more than welcome to roll the dice and try to make some money off that weekly inventory report, right? But be aware, you could make it this week, next week, but one of these Wednesdays, you're going to get hit. And when you get hit, right, it's not just going to take the money back. It's going to take your confidence. And when it takes your confidence, everything becomes more difficult going forward from there. Okay, it's very difficult to make money consistently every week on this report. So if you've made money in the past on it, consider yourself playing with house money. I would recommend be very careful around that news report. It's not about making the money. It's about a long-term career, right? You can make a couple $1,000. You can lose a couple $1,000. Making it is great, but when you lose it, it takes your money and it takes your confidence. And that confidence is, for a lot of people, they never get it back, and they're never the same person. They're never the same trader ever again. So hopefully I'll scare you a little bit, right, to stay away from that news report, because I'll tell you right now, I took a bunch of big hits off news when I was a rookie. Getting the money back is easy, right? Get a job, right? Trade your plan, but the confidence, getting that confidence back is always going to be a challenge. And remember, guys, when it comes to building confidence, we do it together every morning in our trade room, right? Tomorrow morning, we're going to open up bright and early, and we're going to build that confidence by using our trading strategy together. Now, let's talk about the strategy for tomorrow. Tomorrow, of course, we got crude oil, S&P, Nasdaq, gold, euro on the docket here tonight. Everyone's talking about oil right now, though, because oil has this blast, right? This blast going higher. They were expecting a negative 1.3 million barrels. They get a negative 11.3 million. Who is responsible for these numbers? I'll tell you right now, right? I mean, I won't go into too much of a rant here right now, but if you ever want a good example of how efficient the U.S. government is and just how stellar they are at doing everything they touch is just amazing, right? Who is the person responsible for these numbers, right? You're telling me that you guessed 1.3 and it came in at negative 11? Whoever's doing this, and this is not just this week, this is every week, right? Every week, whoever the bozo is, I'm kidding with you, obviously, but whoever is the one that's making those predictions, they need another job, right? give them to the post office or something like that, right? Where they don't have to do that much important stuff, right? Let them deliver, junk mail all day long. But gosh, get them out of that DOE, right? Get them out of the Department of Energy, because whoever's making those numbers, right, is missing the mark big time. I'm kidding with you, obviously, right? But the number itself doesn't matter so much. What is so much important right now is that strong move going higher. As I mentioned in the introduction, anytime I see a strong move going higher, a spike like this. What is a spike? A spike is a strong move that never pulls back to the moving average, right? That's a spike. And whenever I see a spike, there's always going to be probably 4 different scenarios to keep an eye out. One of them is a spike and channel, right? Spikes up into a channel. Okay, spike and channel is one of them. The other one is a spike and range. Okay, you can probably imagine what that one's going to look like, right? That's number 2. And then, of course, you got your spike, right? You get your spike into your flag, right? Or just a flag pattern, as you would say, right? Spike into a flag. Got it? Right? Spike into a flag there. And, of course, the last one, right, is going to be that spike into a wedge, right? And these wedges, see if I can fit all this in here right now, right? Spike into that, right? Into that wedge, right? Try to get that wedge in there. There we go. Okay, so there are 4 scenarios you kind of want to be thinking about right now, right? Spike and channel, spike and range, spike and flag, right? And of course, spike and wedge. And because we began the day with a range, right? Because the day started off as a range, we'll talk about both scenarios here, right? How do we trade the spike and whatever, right? And what would it look like for it to fail? So the first thing is we know we have that spike going higher. I've marked up, as you can see, some levels of support here from that 55.09 to 54.89. This is ultimately where I'm looking for that pullback. And really at this point, I'm just trying to get some sort of pullback off this high. I don't want to buy high right now. So ideally, I want to see a pullback off the high. That will get us below the moving average. And what I'm hoping that sellers will foolishly try to sell this market, right? And I can buy right into those stop losses. So this is the basic idea, right? I want to see a pullback. I want to buy low. We have all this strong bullishness. I want to get that pullback. And again, I've marked up this battle zone. I want to get this pullback. I want to get below that moving average so I can try to get these sellers to sell off the moving average, right? It's a very bull market right now, right? I want to see if I can get those sellers to try to sell off that moving average, because once I see those sellers take the bait off the moving average, then I can look for that buy right into those stop losses, and I can buy the pullback as well. These are 2 setups I'm watching for here, and then we'll kind of break down the bigger picture of what I'm looking for here in a moment here, right? This is kind of the basics of what I want to see. We know we're bullish. Anytime I see this much strength in one direction, we're going to probably see a follow-up leg. Okay, I'll be pretty surprised if we don't, but we'll talk about that in a moment. Okay, what to look for if we don't. So again, it's a failure pattern into a pullback pattern. That's kind of the basics of what I'm looking for, right? Now let's talk about a couple scenarios to find, right, this kind of combination setup. It's a failure below the moving average into a buyer pullback, right, back above that moving average. So let's talk about the 4 scenarios. The first scenario is going to be a shallow pullback and a higher high. If we get that shallow pullback and a higher high, I mark up those highs. I find that channel now, and now I'm looking for that sequence that I mentioned, right, off the low of that channel. Okay, so imagine now, right, this is that failure into pullback combination, right, off of that low. Does that make sense? Now, once we get 3 of these, 1, 2, 3, we typically get a deep pullback. And guess what? On that deep pullback, I'm looking for pretty much the same thing. I want to see that failure into pullback combination and go back up again. So again, first scenario here, that spike in channel, I'm looking for those higher highs, find that channel. It's that failure pattern, pullback pattern off the immediate pullback off the low of that channel. Now, usually the rule of three plays in. 1, 2, 3. Once we see three tops, we typically start to get that deeper pullback because nobody wants to buy way up there. So the market will pull back. And as it pulls back once again, I'm trying to see if I can get those sellers to come in, sell that pullback, try to run it lower so we can then buy into their failure, right? Buy the pullback. And again, that failure into pullback combination. So this is a very, very common scenario. It's called a spike in channel, right? Spike in channel. Now, the second most common scenario is going to be a range. And ranges are pretty easy to tell because what's going to happen is you're going to see a shallow pullback and a double top, right? So again, if we get a deep pullback here, if we get that deep pullback, I'm looking for that failure, right? That failure off the moving average, right, into that pullback pattern and then back up, right? So if we do get the luxury of that deep pullback, that's what I want to see. However, if all we get is a shallow pullback and a double top, right, we bounce off that high, now we know, mark up the high, mark up the low, and this now becomes my range. Now, what does a range-bound market tell me? Range-bound markets tell me to buy low and sell high while avoiding the middle. Okay, this is obviously a bull market here. So if it's a bull market, I want to buy low. And I want to buy low underneath that range. So what I'll do is I'll wait for a pullback. That will typically get the moving average coming over. And much like the original setup, I'm looking for sellers once again here to foolishly think this is a reversal so I can now buy right into those stop losses. So if you find a range, now just a little bit more patience, right? Just wait a little bit longer, buy underneath that range using a seller failure. Okay, what's the third scenario? Okay, the third scenario is not the most common, right? It's also not the rarest. It's what I think to be the most difficult. And that is a flag pattern, right? A flag pattern. Now, flag patterns, okay? Flag patterns are, what's the best way to describe it? They're very slow as they pull back. Okay, you're going to know it's a flag pattern because it's going to be very slow. It's going to be suspiciously slow. In fact, most of the time, a flag will be a narrow channel. And notice, it's the opposite of the bull market, right? It's a bear channel. Okay, now, these flag patterns, right? These flag patterns, again, the most important thing is the personality. It'll be very, very slow, right? Very slow as it pulls back. Most important thing will be now, look for the number 3. 1, 2, and 3. Usually after we get that magic number 3, we usually see a shot higher. Don't buy that because you're buying right into overhead resistance. I'm going to wait for a pullback and buy off of that, what I call a breakout pullback. Okay, that's a flag pattern. I'm going to warn you right now though, flag patterns, they're going to test your patience. Because right about here, you're going to start thinking this market's bearish. You're going to start thinking something's wrong. Because again, it's stubbornly slow. And that's what makes it a flag. It's a narrow channel with this stubbornly slow pullback, right? And that's usually why, at least when I was a rookie, I would always think, man, it's going so slow. It must be a bear market. And when price would go up here, what happens is you've got sellers that come in and they try to sell off that trap. Okay, let them. Because when they do, once we get that, right, once we get that breakout pullback, that will now rope in those sellers and allow you to run them out with a retest of that high. Does that make sense? Okay, fourth scenario. The fourth scenario is the wedge. Now, these aren't very common, but they're very, very important patterns. Now, wedges, what's going to happen is it's going to start off as a channel, but then it will start getting narrower, okay? And this is extremely important. When it gets really narrow, you now want to wait for that deep pullback, okay? So think of it this way. When it's a wide wedge, you can trade inside of it. Once that wedge gets really small, though, now nobody wants to trade inside of it, so you wait for the deep pullback. When you get that deep pullback, what's going to happen is that moving average will come over. You guessed it. Sellers will assume this is a reversal. They won't realize it's just buyers trying to get a better price. They'll try to sell off of that moving average. We'll be there to buy into their failure, buy on that pullback. And where's my target for a wedge? My target for a wedge is right where these two trend lines come together, right? So that's the target up there. Wedges are great patterns. I wish we saw more of them. They're not very common. They just aren't. They always start off, though, with that strong move higher. All right, guys? Now, we've talked about 4 different ways to buy this market right now on crude. Spike in channel, spike in range, spike into a flag, and, of course, that spike in wedge. How do we sell this market, right? How do we sell it? Very carefully. Yeah, very carefully. The first thing is I want to see a pullback that holds but can't retest the high. Okay? In other words, I want the buyers to come in and try to buy once. Remember, this much momentum, the buyers should be able to go back up and at the very least retest that high. So if we get a pullback, again, it won't be a very deep pullback. It's going to be a relatively shallow pullback, right? The buyers try and they can't retest the high. Then we pull back again and the buyers try now a second time, right? Now the buyers come in again. Now, of course, many of you already know this setup, right? So what we're looking for is I've got this bullishness. And what I'm doing is I'm letting the buyers wrap the rope right around their neck, right? You already know what I'm looking for to be a buyer, right? I want to get below that moving average, catch those bears looking, and buy into their stops, right? But if you get that shallow pullback, the buyers try once. We don't retest the high, okay? Now, mark up that high, and I'm looking for that trap. Right? That trap. I call this a crown reversal pattern. My favorite go-to pattern when I'm basically trying to call a top, right? When I'm basically trying to call a top. Does that make sense? Okay? That's my reversal pattern looking for right off of that high. Now, there is also potential that this market says, you know what? We made a mistake. That guy that was counting the beans, right? The DOE, right? Who I was giving some flack earlier. I hope it upset anybody out there. It was all in good fun. But what if this thing tanks, right? What if he was right and the number just came out wrong, right? Oh, sorry, fat finger. I did it the wrong way, right? And the market says, shoot, let's go lower. 1, 2, 3. Okay, that will turn us now bearish. Okay, if we get that 1, 2, 3 reversal now what we're going to do is, let's do this way. Right? It'll look like this. 1, 2, 3. Now, at this point now we're back down into that trading range. Okay? I don't want to trade inside the range. So now what I'm going to do is I'm going to try to find some hidden channels up here. Right? I'm going to find whatever levels I've got, right? And try to find a hidden channel to sell off of. So if this thing just tanks, okay? If it just rolls over and tanks, we don't get any setups, the thing just collapses. What I'm going to do is I'm going to start looking for a trend line. You'll see a couple examples of these on the S&P. I'm going to find that trend line and then look to short it right off that high with what I call a hidden channel pullback. All right, guys? So quite a bit to get ready for tomorrow, as you can tell. We got 4 buy scenarios, right? And then, of course, we got the failure and the reversal. Now, I'm going to keep moving, right? We'll go to the S&P here next because the S&P is a great example of that. I want to show you guys. But I also want to give you a much deeper dive if you want to learn more about all of these entry patterns. And to do that, what I'll do is I'll put a link in the upper right-hand corner for our free trading course. So if you want to see hundreds of examples of how we apply these patterns, spike in channels, trading ranges, reversals, right, failure patterns, everything we're talking about tonight, especially if you're a brand new trader, take that free trading course. It's linked up in the upper right-hand corner. If you're on the website right now or on the blog right now, there's also a big red button for that free course right below the video on our blog at Sideways Markets. So don't be afraid to use that button as well. So in the meantime, though, let's keep this party rolling. Over here now on the S&P, right? S&P, of course, is back inside of that range from yesterday, right? Back inside that range from yesterday. We had that big move up, right? The buyers, of course, tried once, tried twice, and they failed right back down again. So now we know we have a bearish market on our hands, but we're in a very difficult spot right now. We're right inside that trading range. Okay, what does a range tell me? Range tells me to buy low. It tells me to sell high. So I want to be selling high. I'm looking for a chance to sell high up here on the S&P. What else does the range tell me? It also tells me I can buy low. So I do want to buy low here as well. In fact, I've got a lot of areas down here, that pendulum swing, that measured move that I think will definitely be on our radar. So looking at the market right now, it is a bear market, but we're right back inside this range here. So what's the best way to sell? Well, I don't want to sell inside the range. I want to sell up outside the range. And like I mentioned last night, I've taken this trading range. I've used the range to create the sell zones, right, and the buy zones. You'll learn all this. You'll learn a lot of these tricks inside that free trading class that I mentioned earlier. But this is how I find my buy and my sell zones. I use the range to plot the resistance levels above, to plot the support levels down below. So I want to be a seller, right? And just like I talked about on oil, I've marked up some of these lows. I've brought it up to that high, and I've got a really great spot here now to be a seller, right? So really at this point now, I'd like to get this market to get outside this range. Remember, ranges tell me the market is balanced, right? And we should go right back into that trading range, right? A balanced market, range-bound market. What goes up will usually come right down again. What goes down will usually come right back up again. So I want to be buying low. I want to be selling high. The first thing I want is I want to get this market trying to make a run higher, right? I love to see it make a run higher up around the top of that channel. Now, once that thing tries to break higher here, that moving average will come over, right? Moving average comes up now. Buyers will, of course, try to buy the pullback, right? They will. They'll try to buy the pullback, trying to go back and retest that major high at 2,900 again. And, of course, it's a range. It's not a trend. So my goal will be to look to sell right into their failure. I've got a key area of resistance in the battle zone. I've got my trend line coming down for that hidden channel. Love that possible setup. Now, what if we make another run like this? What if we make another run higher here, right? What if it really runs up? Now how do I sell it? The same way we did earlier, right? We go up, one try, two try, back down we go. Now, this obviously is not as dramatic as oil. Oil had that spike, which is why you want that crown reversal, right? So if we make a nice little pop higher here, I'm looking for those buyers to try to buy off the moving average, and we'll look to sell right into their failure. A failure setup, and just remember, you want to stay outside of the range, right? You want to stay out of the range. Sell it above the range and use that failure setup. But what if the market really jumps, right? What if it really runs? Well, now that excessive momentum now tells me that buyers are probably not going to give up as easy. They'll try once, they'll try twice, and then I can be a buyer. Now, I don't need to get that crown reversal in this scenario. Again, oil had a little more dramatic move up there, right? But we definitely want to be respectful of that momentum. One try, two try. Now, how do you know which is which? Again, if it's a relatively shallow pullback, just simply sell right into the stops of those buyers, right? But if it's a real dramatic move higher here, now you got to think, okay, these buyers are probably not going to give up very easily with all that momentum. Let them try once, let them try twice. And again, we're trying to go back down into that trading range once again. All right, guys? Now, what if we sit inside the range here? Nothing changes, right? If we sit here for a while, nothing changes. I want to go up, buyer failure, sell it back down, right? I want to go up, buyer nested failure, right? It's a slightly different pattern to sell off that high because, again, right, it's all about momentum. Strong move up, right? 1, 2, and then back down from there. That's exactly the same pattern now we're watching for us, right, on that S&P. Then, as we go lower, right, what's the plan as we go lower? Well, I've got an idea of where I want to be a buyer. I've got this pendulum swing. I've also got the measured move down here. So this area right here is a real attractive area for us to be a buyer. I also mentioned this last night, that last Friday's close, right? That's a closing price from last Friday. last Friday's close, I thought would probably come into play here this week, and I do still think that will be the case here, possibly here for tomorrow. So if we do get that run lower, I've got my measured move down here. I've got my battle zone down there. I've got my pendulum swing. Remember, it's important to remember that a range is a balanced market. And so when the market runs out of balance higher, it'll probably swing back lower almost the amount, right? Almost as much. Now, as I always tell my clients in the trade room, don't take the pendulum swing literally, right? Don't expect it to be to the tick. Okay, as long as I get down in this area down here, I'm a happy camper. All right. What I'd like to do is get this market to finish off that move going lower. Now, at that point, this will appear to be a very bear market. I mean, look at how much bearishness was there, right? So if we continue going lower here, this is going to be a very bear market. And what's the best pattern to be a buyer in a range when there's a lot of bear momentum? A nested. Just like we said, if the market jumps up and we make a lot of momentum going higher, it's going to be a 1, a 2, right? Because we want to give those buyers the benefit of the doubt. If the market runs lower here, it's the same basic idea because now we've really got a lot of bears, right? And, you know, this is one of those times where I remind you, I tell this to myself all the time in the trade room, it's not enough to be right. Right? Yeah, we're probably going to go back higher here, but I might be wrong on the timing. If I try to get in too aggressively here by just buying into a seller failure, a lot of times you'll have sellers will come in and they'll sell right through that high. Okay? Then it will go back up. So I can be right about where it's going to go, but I might be wrong about the actual timing of the entry. So for me, because of that, I always like to give those sellers a little bit of the benefit of the doubt. Let those bears, right? Let them try once. Let them try twice. Again, this is if we continue going lower here, right? We keep going lower. Let those sellers try a couple times, and then, of course, we'll know where their stops are, and we can buy into those stops. Now, what I like about deep pullbacks like that is a lot of times they open up a lot of space for us, and we can look for that combination. Right? So imagine now, we let the bears try once. We let them try twice. Again, we're down in that buy area down there, right? We get the failure pattern. Don't forget about the pullback pattern. The pullback pattern is also a very reliable setup, right? It's a very reliable, you see over here, right? We run up. The buyers try once. The buyers try twice. It comes down, pulls back, and goes. So there's actually two setups in there, right? So if we run lower, it's that 1, it's that 2, right? This turns now into a failure. That failure oftentimes pulls right back to that moving average, almost as if to say, everybody aboard, last call, right? The failure pattern is usually for the professionals, right? The people who are really in tune with these markets. They're confident it's a range. They know, right? They know they want to buy into that failure. But if you're not prepared for the failure, that's okay. You can always wait for that pullback. That usually comes shortly thereafter there as well. All right, guys? And again, I want to remind you, I'm just simply marking up my charts to give you guys some ideas tomorrow. We're going to do all this together tomorrow in our trade room at 8 o'clock Eastern time, and you're more than welcome to come join me as a new client. And also, too, that free trial I mentioned, that free course, right? That free course up in the upper right-hand corner, that's also going to give you a much deeper dive. And not to mention, we'll show you hundreds of different examples of how we apply these patterns to our favorite futures markets. One last thing here. Well, actually, two more things here, right? What if we sit sideways here and then we get that run down? Okay, that changes things a little bit, right? If we sit here for a bit and then we get that run lower, see, now that momentum isn't as bad. Right? If we just keep going, right? If we just keep rolling lower here right now, that momentum is nasty. Right? It's very strong for the bears. So I want to see 1, 2 again, right? As I mentioned earlier. But if we just sit here for a while, again, sitting comfortably inside that range, then we get that run lower. Well, now the momentum isn't as dangerous anymore, right? Now that range kind of absorbed a lot of that momentum. Now I can look for that seller failure, right, into that bullish pullback and back up into that range again. Does that make sense? Remember, it's all about momentum. The stronger that momentum going lower, the more you've got to give those, right, in this case, the bears, the benefit of the doubt. All right, guys? And then last but not least, what does a breakout look like, right? What would a breakout look like? How about a bull breakout? A bull breakout would be a 1, 2, 3 breakout, right? What's a 1, 2, 3? 1, strong move. 2, pull back to the moving average. 3 is a strong jump off the moving average. Now, do we buy up here? No, right? We definitely don't want to buy up there because now you're buying where all the aggressive buyers are getting out. Now we do is mark up that high, mark up that high, mark up that low. There we go, right? Now we buy that pullback from there. Does that make sense? Right? That's called a 1, 2, 3 breakout with a hidden channel pullback. And that pullback, right, it doesn't need to be a pullback. It could be a classic example of a failure, right, into a pullback setup. That is very, very common, right? So imagine that's kind of the zoomed in version of that, right? It's a seller failure into a buyer pullback. And again, if you want to see real examples of these patterns, right, on our favorite markets, join that free trading course and you'll see more examples there. How about the downside? Same thing. 1, 2, 3. Okay, strong move down, pull back. Yep, pull back to the moving average, strong move off. Mark up that low, mark up that low, mark up that high. Now you've got your channel, right? And typically when you see a 1, 2, 3 breakout, 1, 2, 3 breakout, that momentum will be so strong, you'll be able to rely on that sell coming off the low, of in this case, the high of that hidden channel. All right, guys? So looking pretty good here right now on the S&P. I know there's a lot I've covered here so far, but again, don't get overwhelmed by it. Grab that free course. That will give you the good foundation so you know what I'm talking about. And remember, tomorrow morning, 8 o'clock Eastern time, we're going to do it together. Now, over on the Nasdaq. In an effort to save time here, the Nasdaq is very, very similar here, right, to the S&P. We can definitely see the market is bearish in the short term. We know where the measured move down is, right? I've got my trading range. The market was bullish going into the range. It ran up, a lot of momentum. Buyers tried once, buyers tried twice, back into the range. Everything we've talked about on the S&P, right, almost identical here on that Nasdaq. So now we know, right, we know the amount of that move above, again, because ranges are balanced after all, is oftentimes the amount of the move below. So we're expecting the move up, we're expecting it to rotate down to this area at that 74.80 area here at some point tomorrow. Again, don't expect it to be tick for tick. Okay, the pendulum swing is it's not going to be exact. Right? It sometimes is exact, and that really kind of gives you goosebumps, right? We saw an example of today on oil, but for the most part, though, the pendulum swing is just an area, right? It's just an area. It's around this, right? It's around this area down here that we'd want to see this market, right, get that deep pullback. Okay, so now that we have more of an idea of this, what is the short-term momentum? Momentum is bearish right now. So that definitely gives those sellers that little bit of an edge, right, as they go. Now, as I mentioned before, it's a range, okay? So we want to stay away from that middle. We want to sell high, and we want to buy low. And a lot of this really has to do with momentum, right? How does the market set up? You know, for example, right now the easy part is I don't want to trade inside the range. I want to get out of that range. Do we get, for example, a pop higher? Buyer pullback, into pullback failure, into bear pullback back into that range, a shallow pullback, right? A relatively shallow bounce off that low. Again, that's a buyer failure pattern, right? Into a seller pullback, right? Usually off that same level. Or do we see a jump, right? And as it jumps with that big bullishness to it, right? It's 1, it's 2, and back down again. Or do we jump and actually succeed at the breakout, right? Look what happened back here. Price jumps up. They get the pullback. It's on a silver platter for these buyers. All they have to do is just punch this thing to the high, and they couldn't do it. So remember, it's not enough to just get a strong move up, right? Strong move up is not a breakout. right? Look back, look left. You can see for yourself, right? I want to see it 1, I want to see it 2. Again, it's all about giving those buyers, in this case, the benefit of the doubt. Or do we go 1, 2, 3, right? 1, 2, 3, 1, 2, 3 breakout, mark up. And again, you don't want to buy that first pullback. I know it's very tempting, but look at what would have happened if you bought that pullback back here. That's a very strong move up, right? That was a really strong move higher, and yet they couldn't make the breakout stick. That's why you can't trust those breakout pullbacks out of a range. Okay? You got to understand it's a range. It's not a trend. Once you understand it's a range, it changes your priority, right? Your priority is to use that magnet, right? That magnet sitting right inside that range. Get it back into that range. So again, if we go up, right, buyers try once, buyers try twice, back into that range again. Or 1, 2, 3, you got it. Mark up the high, mark up that low, find that, right? Find that hidden channel, and we're good to go. All right, guys? That'll be your breakout pattern as we go. Now, what if we go sideways? Sit on hands, right? Sit on hands. We go up, right? We go up above that range. Moving average comes over. Buyers now try to buy the pullback, right? We sell into their failure. Okay, what if they run lower, right? If they run lower, same thing. Let them take the market running lower, right? Get that moving average to come down. Get those sellers to try to sell off of it, right? We're buying into those stops. We're buying that pullback. A classic situation, a classic combination setup. It's a failure into pullback combination. It's not a bear market, right? It's a range market with a bear momentum. That's all it is, right? It's not a bear market. It's a range market. Look left, and you can see it's a range, okay? Now, what if it just, right? What if it just tumbles all the way down to that pendulum swing? See, that's the difference, right? If it goes sideways here, now that absorbs that momentum. So now I can go 1 try, 2 try, seller failure, back up in, okay? But if it really tumbles lower, right? If this thing really runs now, okay, nice big strong push down, we'll use the same idea as that sell off the high. We want to see those sellers try a couple times. Give them the benefit of the doubt. Let them try once. Let them try twice. That's when we know exactly where the stops are. Now I've got, again, that moving average will come over. It's a seller failure into a pullback, going back up now into that trading range. So again, it's a lot about momentum, right? And again, breakout, 1, 2, 3, 1, 2, 3, right? 1, 2, 3, mark up that breakout pattern, right? 1, 2, 3, mark up that low, mark up that low, mark up that high. And again, typically, right, typically, if you get a 1, 2, 3 reversal like that, or 1, 2, 3 breakout in this situation, right, you will get a reliable sell off of that high, right, because momentum will be so strong at that point. All right, guys? So Nasdaq really is just ripping the page right out of the S&P playbook. Buying low, selling high, avoiding the middle, right? Avoiding the middle. See what's happened here, right? Market goes up, buyer failure. See that little pattern right there? That's a classic case of a failure pattern you want to stay away from, right? Stay away from those middles, right? We go up, the buyers try to buy, right? Ooh, that's not a good spot to trade. You're trading right inside the middle. Okay, you want to get up. Get those, right? Get that moving average coming over. Get those buyers to take it and sell right into those stops, right? Do you see the difference there? I hope you can see the difference there, okay? First one, bad, right? First one, bad. Why? Middle, bad, right? Second one, good, right? This one, small risk, big reward. Much, much more enticing, much more reliable because of it, right? You want to get away from that range because the range is the magnet, right? Traders don't want to trade inside that range because they know there's no money to make there, right? That's what the target is. We want to be getting in. We want to be getting in a far distance away from that target, right? So middle of the range, bad, right? Outside the range, good. Get up, buyer failure. Get down, seller failure. and we'll keep this thing moving. Let's keep going here. How about some gold right now? So gold is definitely the most difficult out of all of these markets. It was yesterday too. We have what appears to be a very confused gold market right now. And I talked about this last night. This makes perfect sense because at the end of last week, it sounded like the U.S. and China had completely blown up any trade negotiations whatsoever. And then we come in on Monday morning. We talked about this last night, right? We come in on Monday morning, right? And President Trump in the U.S. and President Xi in China, they're holding hands. They got nicknames for each other, right? They're all bro, right? They're all broed out. They're buddy. And so the gold, you could definitely feel gold is still like, guys, what exactly do you want to do with this situation? You can definitely feel that confusion. We spent most of the day today, you'll notice, right, sitting back inside that range in a very quiet, right, quiet session. Then we saw this big jump up, right? And of course, that big jump up, anytime we see a big move like that, what is it? It's a spike, right? Anytime we see that big move, we gotta respect those buyers. They're gonna probably get, right, that second leg. In fact, what I did was I marked up that high, right, found that low, and I said, all right, we're gonna probably see buyers here trying to buy off of that low. Now the problem is if you're buying that pullback, that's a really high price to be buying because it's a range. I really don't want to buy right there. If I do want to buy, what would a buy look like? Right? What would a buy look like here? We'd have to see some proof, wouldn't we? Right? We need to see some more proof. So as we run higher here, right, you could look at this almost like a flag pattern, right, going up, pull back, and go, right? That flag pattern we mentioned earlier on oil almost looked like a flag, right? There's one, there's two, there's three, up and over and go. Now, this is not a trending market. It's a range-bound market, so I'm waiting for that proof now, right, of that move going higher. Once we get that proof, then I can go out, mark up my high, mark up my low, and look for now that pullback here, right, failure pattern into pullback combination, right, that same combo setup that we've talked so much about already. All right, so what I need right now to be a buyer is I want to see proof. I want to see one more leg going higher. Prove it to me, because I don't believe you, right? For what I can tell right now, they got the strong move up, right? I want to see some proof before I start selling this thing back down into that range. Okay, now here's a couple things. There really are three scenarios I'm watching for right now. One is going to be obviously a strong move through. Right, so strong move through going higher. At that point, what I'm going to do is I'm going to mark up that high, mark up that low, and then wait for that deep pullback. If I can get that deep pullback, now I can grab that failure into that pullback combination, right, and run back up to retest the high. Now, we may not get that deep pullback. We may get something like this. We go up, we see a shallow pullback, and we hold. That becomes your spike in channel. We now mark up that high, mark up that low, and just like on oil, right, it's that failure into pullback combination, right, off that low. Rule of threes, 1, 2, 3, then you wait for, right, so it's buying off the low of that channel, then we wait for the deep pullback, moving average comes over, seller failure, right, into pullback combination from there. Okay, and again, I went over that at the beginning of the video tonight on the oil, right? So you should be able to get that first pullback. Again, if we make a run up, shallow pullback, higher high, mark up that high now, mark up that, right, that channel now, use that first pullback, right? Then you've got the 1, 2, 3. Again, you've got one shot there to buy off of that low. Then you want to wait for that deep pullback. Sellers try to sell into it. We, of course, now buy into their stops and right back up to retest those highs. Okay, that's another scenario. Now, one more scenario here is the most aggressive, right? For all you aggressive traders out there, strong move up, right? Very strong move higher. It's a 1, it's a 2. We call these 2 try breakouts. This is by far the most aggressive, right? Now, where's my target going to be up here? That's the big question. Okay, my target's going to be up at that 65. So it's very important that we also understand where we're trying to go. Because, for example, if I see a strong move up and I get a 1, a 2, I can buy that now with the 2-try breakout pattern. But if this thing runs and we get it right here, and that's not going to work very well. So if we have very little space up here, you want to incorporate a trap, right? One of the many rules we talk about in our trade room every morning is whenever we have to worry about buying high, right? Or in other words, buying away from support near resistance. Okay, what does it mean to buy high? In my book, buying high means I'm buying a good distance away from support, right? The moving average is way back here, right? I'm buying a good distance away from support, and I'm closer to a level of resistance instead. Does that make sense, right? I'm closer to resistance than I am at support. That's buying high. Whenever you're buying high out there, you want to look for that trap, because that trap is going to rope in those counter trend sellers and basically buy right into their pain, right? Buy right into their stops. And you need those stops to fuel that trade going higher. Because if you're going to buy high like this, you need all the help you can get to keep propelling that market running higher. And there's no more effective way to do that than with a trap. All right, guys? So really, we got 3 different things to look for here on the buy side. Now, what about the sell side? Well, we just played right into what I was hoping we'd get, and that is the buyers buying off the low of this channel, right? We definitely anticipated this, right, earlier today. We saw that big run up. We thought, all right, let's find that hidden channel. That's probably where we're going to see buyers coming in. It's a range, right? It's a range, so I'm not going to buy that area, right? What I will look for, though, is once the buyers commit, right, now I start looking for that failure going back in. Now, because momentum is so great here right now, what I really want is I want to see that same nested, that 1, that 2, and ideally, I'd like to get underneath that trend line. This will be the prime setup here for the short. Okay, I'm going to see the buyers now try to buy the low of the channel, get underneath that channel, and then just give a little tap, right? Use the underbelly, as we call it, right? Use the underbelly of that channel. Make sure those buyers try twice on the pullback, right? Because again, you want to give them the benefit of the doubt. Get underneath that channel and then sink it right back down into that trading range. All right. What else might happen here? We may also see a 1, 2, 3 reversal. Right? 1, 2, 3. Mark up that low. Mark up that low. Mark up that high. You got it. Right? Selling off that high. Okay, back into that range. Okay, what if the market collapses? Just collapses back into that range. Then what? Goes sideways again. It's a range again. Okay, bear bias. I want to sell high, right? Get it up. Buyer failure. Sell it back down in. Right? We go back into the range. We go lower. What do? We buy low. Seller failure. Back into that range. Right? So very, very similar. We've already talked about here right on this video. This is a little bit tricky though. Again, wait for that proof. You've got 3 different scenarios there. You can go back and rewind the video if you want to go over it again. Or it's the 1, it's the 2 underbelly, right? It's the underbelly setup, right? Underneath that range. It's not an underbelly setup. It's just it's a nested, right? It's a nested failure because again, where it's a range, I want to sell high. I want to buy low. Right? I want to fade these breakouts. I just have to respect the momentum of this market right now. I'm not just going to sell it short. All right, guys? And then again, if we end up back inside that range, it's like nothing happened. Right? 1 try for the buyers. 2 try for the buyers. Sell into those stop losses back into the range. Right? Or we go back into that range, right? 1 try for the sellers. 2 try for the sellers. We look for that 2 try and back up now, right? Back up now into that trading range. And again, I've got hundreds of examples of these range setups in that free trading class. So make sure you grab that free course in the upper right-hand corner or hit that big red button right below me tonight on the trading blog. Last but not least here, over on that mighty euro, over on the euro. Euro is bearish with a capital B. It's been a very low volume week here on the euro, as you probably have heard me say many times. Most of Europe is on vacation in these last few weeks of August, right? A lot of folks here in the U.S. as well. But we definitely have some low volume here right now. So it's really important we stay patient for our setups. You know, you can't force the market to move. If you do, you're going to lose money, right? We probably have learned that lesson by now. That's probably why you're here watching this video right now. We know we're bearish. Okay, we know we're bearish. We want to sell at some level of resistance. And I talked briefly about this last night. We have this little cluster, right? This little, back and forth here right now. It's a range, okay? And ranges are very, very sticky. And a lot of times the price will come right back to those ranges, almost as if to say, everybody on board, right? Last shot, this is your last chance to get in. I'm expecting that to happen at some point tomorrow, right? Now, that may not happen right away, so again, we may have to stay patient here. I've got, what you can see here is, again, bear market, right? I've got a strong move down from yesterday. I know where these guys and gals want to go, right? They want to run down into that, right, measured move / battle zone down there. So I don't want to be right, I know where they're trying to go. I'm going to mark up these two lows. I'm a really big fan of these hidden channels or negative channels or inverted channels, however you want to draw them or call them, right? I'm drawing off the low. I bring it up to that high. It just creates this beautiful channel. Looks great. Midline fits well. Right? That's a good looking channel. So now we have that, right? We got reason to believe now we have that channel. I want to sell up around the high of that channel. And I always like to anticipate, right? So imagine now we get that pop higher. Moving average comes over, and you know what I'm going to talk about, right? Buyers will try to buy the pullback. We now know where their stops are. We can sell into those stops. We can grab that pullback off the moving average. Right? Now, we saw an example of this earlier on today, right? Failure into pullback right here, right? Failure pattern right there, right? Failure into pullback here. So you can see lots of examples of these patterns. And again, not just on the euro, these patterns happen all the time in both trending and range-bound markets. So we know we're trending lower. We know we're bearish. I want to see us pop up. I want to get that moving average coming over, get those buyers to try to foolishly call that top or that bottom, right, and look to sell into that failure there with a failure, right, into pullback combination. What if we go sideways here again? Possible, right? Not likely, but what if we go sideways here? If we go sideways, it's a range, right? It's a range. What do we do with a range? We sell high, we buy low, we avoid the middle, right? We wait for that one try. We wait for that two try. I call this a two try failure, right? Above the top of that range. Buyers try once, buyers try twice. Now we know where stops are, and we're selling into those stop losses. Okay, what if the market goes lower? What if we keep going lower? If we keep going lower, what I'll do is I'll adjust the channel. So if it keeps going lower without me right now, adjust that channel, right? Bring it down, get it up, right? And then, of course, same pattern here. Failure into pullback as we go. So if we keep going lower here, right? If we keep going lower, I'm still waiting for that pop, right? We're still waiting for that chance to sell up around the high of that channel. I just don't want to chase after it as it goes lower. Again, chasing after markets, it's a lot like that analogy I used earlier about making money in a casino. Yeah, you can get lucky every once in a while, right? You might get lucky for a week or two, right? Chasing after markets. But if you make your money, you live by the sword, you die by the sword. If you make your money chasing after markets, if you make your money, right, trading breakouts, if you make your money trading news, you're going to end up dying by that sword as well, right? Those breakouts will stop working, the news will go against you, and you'll find yourself, right, selling the market as it goes lower just to see yourself get stopped out of, right, small stop to see it work without you. All right, guys? So as we go lower, we're looking to sell that high as well. What does the reversal look like on the euro? Reversals are pretty easy. They take patience, though. Strong move up, pull back to the moving average. Yep, hold that pull back, jumping off the moving average now. Mark up that high, mark up that high, mark up that low, and now we know where our sweet spot is, right, off that first high and the low of that channel. Now, this is not drawn to scale, right? This could be a 1, 2, 3 from there for all I care, right? Doesn't need to be that big. Just got to get a strong jump off that moving average. Once you get that strong jump off the moving average, you're good to go. Mark up that low, right? Mark up that high, mark up that low now. There's your sweet spot right now, and looking to buy that pullback. Targets, of course, back up to retest the high. Targets for the sellers, back down to retest those lows. So now you know what to avoid tomorrow. Now you know what to dig your heels in for. Now you know why momentum is such an important part of the day trading business, right? And again, as I mentioned earlier, we're going to be together tomorrow morning and we'll do it together, right? So there's no reason to do this on your own. I'll tell you right now, I really struggled personally on my own for many years. It wasn't until I eventually bit the bullet, hired a coach, and started to finally work with people who had a lot more experience than I did. And that's when I finally stopped losing and finally started seeing the consistent results that I was looking for. I want to give you that same advantage as well that I was given many years ago. And to give it to you, we do it together every morning in our trade room. The strategy is simple, but what's not so simple is applying it to a moving market. And that's why our trade room is such a great advantage for our clients. So tomorrow morning, 8 o'clock Eastern time, our advanced membership includes a lifetime membership to all 3 of our membership classes, beginner, intermediate, and advanced. It includes our trade room every day, all the ongoing support, right? Follow that button right below me tonight on the website. If you're on YouTube right now, I'll put all the links in the description of the YouTube video. If you're on the blog, there's a big red button below the video on the blog right now to take you over to our homepage to register for advanced membership. Don't forget, if you're not ready yet to be a member and be a client yet, that's great. No problem at all. If you're here for the first time, grab that free trial. You'll love the free trial. The free trial has our free trading course, which I think everybody loves these days, right? I get so many great feedback emails regarding that free trading class. You'll get an access pass to our free pass to our trade room. So you come out and see how it all works, right, in our trade room. And you'll also, of course, get hundreds of examples, probably thousands at this point, of how we apply this strategy, what I call my 3-step strategy, to our favorite futures markets. So if you're not going to come join me tomorrow morning in our trade room as a client, do that. The next best thing here is to grab that free trial right to the left of my ugly mug. And again, I'll put all the links for you guys either below the video tonight or in the description. If you have any questions, don't forget you can always call that toll-free phone number. You can always use that live support tool on the right-hand side of the website. And whatever you do, be careful tomorrow. Again, as we go into the next few days, right, price action will be a little bit slower. So stay patient. Keep that discipline. Come join me at 8 o'clock Eastern time tomorrow, right, and do it with me. If not, we'll come back and do it again tomorrow night on the next edition of our nightly newsletter. As always, guys, my name is Joseph. Great to have you with me. Get out of here. Get some rest. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.